Hey everyone, welcome back to Corporate Decoder, where we decode the language of corporate filings to bring you the juicy details. And honestly, yeah, sometimes those details are about a company's financial health, and what that means for all of us. Today we're diving into UiPath Inc.'s latest quarterly report, and let me tell you, their numbers are painting an interesting picture. UiPath Inc., the company behind the popular automation platform, they've just dropped their Q3 report for the fiscal year ending the 31st of October 2025, and we're going to break down what it all means for their business and their investors. So let's jump right into the numbers. Looking at their balance sheet for the 31st of October 2025, a few things stand out. Their cash and cash equivalents stand at a pretty healthy $743.7 million, down from $879.2 million at the start of the year. This decrease suggests they've been actively using their cash. Their total assets are around $2.9 billion, which is up slightly from January. But on the liability side, their total liabilities are just under $1 billion, about $971 million. Interesting to see their accounts receivable is $366.8 million. That's the money customers owe them. They've set aside $4.3 million for potential credit losses, which is a small percentage but something to note. Their current liabilities are $788.7 million. That's what they owe in the short term. A big chunk of that is deferred revenue, which is money they've collected but haven't yet earned. That's $534 million. This deferred revenue is huge for a subscription business because it indicates future revenue. Now let's look at what's left for the owners. Their total stockholders' equity is a healthy $1.9 billion. This is a good sign, showing positive net worth after accounting for all their assets and liabilities. Alright, moving on to the income statement. This is where the real story unfolds. For the 3 months ending the 31st of October 2025, total revenue hit $411.1 million. That's a solid 16% increase from the same period last year. Their licenses revenue brought in $150 million, up 9%, and their subscription services revenue shot up to $247.6 million, which is a 20% jump. This subscription growth is key for UiPath's business model. The pro services and other category also saw a nice 28% bump to $13.5 million. This diverse revenue stream shows they are growing across the board. The cost to generate that revenue, though, also went up. Total cost of revenue was $68.8 million, up 8%. A big part of that $27.4 million came from professional services and other costs, a 53% increase. This suggests they are spending more to deliver those services. Despite the increased costs, their gross profit percentage actually improved slightly to 83% from 82%. That tells us they are managing their direct costs effectively relative to their revenue growth. Now on to operating expenses. Sales and marketing expenses were $179.2 million, down 4% year over year. This is interesting because their revenue grew significantly. They spent less on sales and marketing relative to their revenue, coming in at 44% of revenue compared to 53% last year. This efficiency could be a sign of smarter spending, or maybe a slight slowdown in aggressive expansion. Research and development costs stayed pretty much the same at $96.9 million. They are investing heavily in innovation, and maintaining that spend shows their commitment to future growth and staying ahead in the AI automation space. General and administrative expenses were $53.2 million, up 6%. That is a smaller increase compared to revenue growth, which is generally a good sign as they scale. And the big picture here is operating income. They moved from an operating loss of $43.4 million last year to an operating income of $13.1 million this quarter. That's a massive turnaround and indicates they are becoming much more profitable in their core operations. Now, for the tax benefit, they recorded a whopping tax benefit of $174.2 million this quarter. This huge benefit is primarily due to releasing a valuation allowance on deferred tax assets. Essentially, they are recognizing that they will likely pay less tax in the future than they previously thought. This is a positive accounting development that boosts their net income considerably. All of this led to a net income of $198.8 million for the quarter. That's a huge jump from a net loss of $10.7 million in the same period last year. This shows UiPath is not just growing, but is also becoming significantly more profitable. Looking at the 9-month period ending the 31st of October 2025, the story is similar. Total revenue reached $1.13 billion, up 12% year over year. Subscription services revenue led the charge with a 20% increase to $703.2 million. Again, the subscription model is clearly powering their growth. Total cost of revenue for this 9-month period was $197 million, up 8%. The cost of professional services and other revenue nearly doubled up 49% to $76.5 million. This indicates a significant expansion or an increase in the cost of delivering those services. Gross profit for the 9 months was $932.4 million, with a gross margin of 83%, which is a slight improvement from last year. Sales and marketing expenses saw a notable decrease of 10% to $505.2 million. As a percentage of revenue, this dropped from 56% to 45%. This efficiency gain in their sales efforts is quite impressive. Research and development expenses increased slightly by 3% to $290 million. This sustained investment in R&D is crucial for innovation in the competitive automation market. General and administrative expenses decreased by 9% to $160.7 million, showing good cost control as they scale. The operating income for the 9 months improved from a loss of $196.2 million to a loss of $23.5 million. While still a loss, this massive reduction in operating losses shows significant progress towards profitability. Their benefit from income taxes was $169.7 million for the 9 months. Similar to the quarterly report, this large benefit is again influenced by that release of the valuation allowance on deferred tax assets. And the net income for the 9 months was $177.9 million, up significantly from a net loss of $125.5 million in the prior year. This is the strongest indicator of their improved financial health. Let's quickly touch on cash flow for the 9 months ended the 31st of October 2025. Net cash provided by operating activities was $188.9 million. This is up from $174.5 million in the same period last year. It is great to see healthy cash generation from their operations, which is the lifeblood of any company. In terms of investing activities, they spent $507.2 million on marketable securities, but also had $585.1 million in maturities, so they are actively managing their investments. They also paid $24.8 million for business acquisitions. Financing activities show a significant outflow of $358 million for stock repurchases. This indicates they are returning capital to shareholders through buybacks. Analyzing the numbers in strategy. So what's the story here? UiPath is clearly navigating a significant transition from a growth, focused, almost unprofitable company to one that is demonstrating strong profitability and efficiency. The shift in sales and marketing spend as a percentage of revenue is a key indicator that they are becoming more efficient in acquiring customers. While revenue growth is solid at 12 to 16%, the real headline is their movement toward profitability, driven by both improved gross margins and better control over operating expenses. That massive operating income turnaround and the resulting net income surge are directly tied to their core subscription business, which is clearly gaining traction and becoming more profitable. The substantial tax benefit, however, is more of an accounting event reflecting future tax savings rather than immediate cash generation, yet it undeniably boosts their reported net income. The company is essentially demonstrating that their strategy of leveraging AI to build a comprehensive automation platform is paying off, leading to increased customer adoption and a healthier financial profile. However, it's not all smooth sailing. While the company looks financially stronger, there are always risks. The continued investment in R&D at high absolute dollar amounts is necessary, but it does eat into profits. Also, their reliance on subscription services means they need to keep customers happy and constantly innovate to avoid churn. The legal proceedings mentioned in their filing, while currently not resulting in any accrual, are a constant background risk, a drain on resources, and potentially a reputational hazard if things go south. The substantial stock repurchases indicate management's confidence, but also ties up significant capital that could potentially be used for further strategic investments or acquisitions. In conclusion, UiPath is showing impressive progress towards profitability and sustainable growth. Their subscription model is proving its worth, and their ability to generate operating income is a massive win. They are effectively balancing innovation with cost management, and their financial trajectory is looking increasingly positive. However, investors should remain watchful of the competitive landscape, the ongoing legal matters, and the company's continued ability to manage its substantial R&D and sales investments efficiently. Alright, that's our deep dive into UiPath's latest financial report. What are your thoughts on their performance and future prospects? Let us know in the comments below if you found this breakdown valuable. Smash that like button and subscribe to Corporate Decoder for more in-depth analysis of company filings. Don't forget to join our Discord community linked in the description below for more discussions and insights. Thanks for watching. See you next time.